The other thing I want to talk about is MVRV. If you look at the raw MVRV, we are kind of like at sitting below 2, which is pretty good. I mean, the market valuation, essentially the way I read MVRV is how much unrealized gains exist in the market. Right now, the unrealized gain is less than twice. If you look at the 1 to 2 range, it's less than twice the real dollar that has entered the market. And that's amazing, right? You don't want the market cap to be too much higher than the real dollars that entered the market, because that only means the market is thinner and the valuation is frothy, right? So that's great. But we don't know how high is the max in this cycle. As you can see, like, we have been just kind of going down. The maximum has been going down, so we don't know like what is the max to kind of gauge how high this point is, right? That's exactly what we have done in the rest of the slides. We have adjusted MVRV by a metric of volatility. Volatility is going down, as you can see, throughout Bitcoin's history. And then I've created a model that kind of that orange line is a model of volatility reduction. And it's also, by the way, it's interesting that volatility is picking up from a low right now. And that's a great sign of market warming up, right? But if you adjust for this volatility, you get a much better MVRV model, which I call volatility-adjusted MVRV, VMVRV. And this is basically always ranges from 0 to 100, and the peaks are kind of in the same range. That gives us a very good gauge to see how high this will go. So right now on this chart, we are at, what is it? We are at kind of 38, 37, and that's still below half. So we have quite a bit of ways upward compared to, you know, the point that has typically marked the top of the cycle. So this is another valuation model that we can think of. So Bitcoin is essentially sitting at 40% valuation if you considered 100% being the historical peak.
Which is interesting because it's very similar to the power law. This is a completely different metric, right? This is on-chain data. This is to do with, like you said, the MVRV, so market value to realized value. So completely separate than the other one you were showing, which was the power law or the volatility adjusted power law metric. But that one, they're both sitting around the same place, which is interesting. So it's confluence, right, between two different metrics.
Exactly.
And but this metric is actually, like, I've looked at on-chain metrics for the last 4 years. I've looked at all the different available on-chain metrics with Glassnode. But this metric is fantastic, Sina. Like, for people don't realize how awesome this metric is. You pioneered this. Like, you created this yourself. I've never seen anyone else post this or create this. And this metric, Glassnode should have on their site. This is way better than MVRV. Like the one that everyone else is looking at is the use of it compared to this. It's not as good because you can see the consistency of those peaks. And the interesting thing is you can see where we topped out. We got up to about looks like around 72 or 3. It's actually comparable. Looks like we had a. Actually, we got relatively high. Actually, if you look at that, because look at the peak we had after the just before the COVID crash, right? Before we went down for COVID, we had a bit of kind of a mid-cycle peak there. That one looks like we got only up to around 50 just before that, like that the peak there between the two. Yeah, that one looks like we got up to around 50 on that. So this one was higher on this metric, right? And so and then if you look at, I guess we had roughly a similar peak kind of before the 2017 the 2017 peak. We had a relatively kind of like high peak there, but that was pretty late in the cycle. So, but yeah, this metric's interesting. I don't know if it's like, the only thing about this metric is because of the downtrend at a certain point, it seems like we're going to have to break to the upside on this metric. Like, it seems like it's inevitably going to break, but we'll see though. It's held up really well. And it's really useful as of now, right?
But some of the things that this might help us is like kind of adjust the basic expectation. Like if you looked at MVRV when a few months before or after the approval of the ETFs, we were at here, right? This is the first 73 mark that we saw. But historically, 2.5 or something, which is this one, right? It's probably this point, right? 2.5 isn't that high, but in fact, if you looked at the adjusted version, you see that's actually quite high. Because this cycle, well, the max has gone so much lower, right? So 2.5 actually did seem quite a bit like at 75% or something here. That does show quite a bit of heating up of the market, right? So
Which would
this
have,
is,
yeah, that would have helped to for people to be like, okay, well, we might need to cool off for a while, right? Which is exactly what happened. You can see the last 8 months, we went down from just from going sideways for 8 months. We essentially went down from
exactly.
like 70, whatever, 3 down to 40 or down to 38. Like, it was a significant drop. So yeah, it's a very interesting metric. I really like this one.